that we have seen from the highs of 26,230 has been mainly led by FIs selling. If you look at the index futures data, they started this October series with a long short ratio of 81%, which is long heavy. Whenever we see that 80-85% getting hit, markets usually witness a short-term top and see some correction from there. So now that ratio has come down to 44-45%. This means that from long of 81%, they are now more in the short, on the short side of the market, and the net positions are on the short side. So I think the data indicates that on the index front, until we see this selling getting stopped by FIs, we will not see any big trended up moves or a resumption of the uptrend anytime soon. So I think last two trading sessions we have seen an up move because we were oversold. PCR Nifty PCR was around 0.64. So I think we are witnessing this up move, but no, we are not expecting any trended up move to come in very soon. I think maybe that sharp price-wise correction has been done for now in last 1 week. Are that markets would consolidate. So we do not expect any big up moves or any significant corrections in the index happening in the very short term. But there would be, as we are witnessing today, more of a sector rotation. The pharmas are doing well. Many of the mid-cap stocks which have witnessed a sharp correction, they are rebounding. So I think there will be more of a sector-specific rotation which will keep the momentum intact, but not expecting any big moves on the index.
Okay. Shivangi Sarda also with us, analyst of equity derivatives and technicals at MOFSL. Shivangi, good having you. It seems that the banks have taken the center stage, or financials are at the forefront of movements today. How have you looked at trading either the Nifty bank or any of the large financials, if you will? Shivangi, I think you're on mute.
Yeah, very good afternoon. Thank you for having me. So we've seen that even though, there has been somewhat of a pullback in Nifty, but the bank Nifty is still underperforming. Some sort of pressure can be still seen over here because call writers have, added in positions even today. Bank Nifty has struggled below its 50 daily exponential moving average yet. And we are seeing that some of the NBFC space is looking attractive right now, but I believe till the time Bank Nifty does not crosses and holds above 51,500, then this entire space could be just a minor pullback and could not sustain. So my take on this would be to wait and watch in this entire sector and maybe better focus on the other sectors which are in momentum.
All right, let me get, the top picks this afternoon. I'm wondering, Ruchit, if you're going to look at any of the IT pack and if TCS is on your radar or any of the IT companies are on your radar apart from your picks this afternoon.
Good afternoon, Tamanna. Well, I would wait for TCS results to come out before entering the IT names. We have seen a good consolidation in last few trading sessions, but I think in results when we have just a day later. So better to wait for the outcome of the results, then decide whether we should see some fresh momentum in the IT names. So IT is not on my radar right now until TCS results are out, but definitely Pharma is, because the kind of outperformance of the long build-up that we are witnessing in some of the Pharma names, I think that relative outperformance should continue irrespective of what the market or the index does. So within the Pharma space, Cipla is showing a breakout from a consolidation indicating a resumption of the uptrend. So Cipla can be bought at current levels with stop below 1650 for potential targets around 1760. And one short side that one can take a risk is in ITC. Although this is one of the name where we hardly give any sell calls because the kind of trended phase the stock has shown. But today's trading session, the stock has breached its moving average support of 40 days exponential moving average support. And even if you look at the option segment, and a lot of call writing has been seen today. Call additions in the calls of 500, 520, 540 strike prices have been seen. So that would restrict the price up move in the near term. ITC, we expect a retracement towards 485, 484 kind of levels. So one can go short over here with stop loss above 507 for targets of 484.
Okay, so sell ITC is the call from Ruchit. Interesting one over there. ITC was in focus last couple of days because of the demerger news, but now a sell call coming in from Ruchit. Shivangi, what's on your radar this afternoon?
So we are seeing somewhat of a pullback here in this entire consumption space. So my first pick over here would be Indian Hotel. We've seen that stock has rebounced exactly from 650 odd levels. and RSI is also showing a positive divergence here. The good part is that there has been a lot of unwinding in the call writers over here. So this is going to take the stock higher. So recommending a buy here. Now the targets that we're looking at is next 725 with a support of 680 levels. The second pick on my radar is Siemens. This entire space stocks are buzzing in momentum today. This particular stock has moved after the consolidation of the last 3 to 4 months. And we are seeing that, the previous hurdle zones are being surpassed, and good momentum can be seen over here with volumes adding here. The previous hurdle of 7,500 has been, a crucial support zone now. So clearly a role reversal has happened here. So this is looking quite attractive for 8,000 levels with a support of 7,550. So.
Okay. Siemens on the radar as well for Shivangi. But the other big story today, of course, was the monetary policy, and RBI Governor Shaktikanta Das at the policy announcement, while raising the policy announcement, talked about concerns about certain NBFCs pursuing aggressive growth strategies without proper risk management framework. Listen into what he said.
It is observed that some NBFCs are aggressively pursuing growth without building up sustainable business practices and risk management frameworks, which should be commensurate with the scale and complexity of their portfolio. An imprudent growth at any cost approach would be counterproductive for their own health. Second, driven by significant accretion to their capital from both domestic and overseas sources, and sometimes under pressure from their investors, some NBFCs, including microfinance institutions and housing finance companies, are chasing excessive returns on their equity. While such pursuits are in the domain of the boards and managements of NBFCs, concerns arise when interest rates charged by them become usurious and get combined with unreasonably high processing fees and frivolous penalties.
Having said that, no real impact negatively on NBFCs after the statement from the governor. In fact, financials have led the way. And I think in sense also because it became very clear from the policy, the big takeaway, Niraj, that we've been talking about all day is that the stage is now getting set for a rate cut. You have had a change in stance, etc. But just on the NBFCs, Ruchit, want to get your take on how you see this pack and what you're liking over here. How are you feeling about a Bajaj Finance right now?
I think we should see some stock-specific momentum within the NBFC space. Today, although we have seen that Bank Nifty and Nifty Financial Services Index both were up when the announcement was made, but then the gains were not sustained. So I think somewhere, the policy outcome was also much on anticipated lines of what many market participants were expecting. So that has been factored in now. So, but yes, there would be some stock-specific moves, and within the NBFC space, a couple of names looks good. One is Bajaj Finance or Bajaj Finserv, where on a longer term charts, after that consolidation phase of about 3.5-4 years, these stocks have given a breakout in last month, that too with very good volume. So I think these retracements or pullback moves which comes, that should be used as a good buying opportunity for a bit mid-term perspective. And amongst the other NBFCs, I think Shriram Finance is another stock which looks good on any kind of declines, because here too, if you look at last quarterly results when they were announced, post that, although the NBFC space overall has not done well, but Shriram Finance was one of the stock which had seen a very good price volume action, and a relative outperformance was seen when the sector was not doing well. So I think these are some of the names within the NBFC names where the downside seems to be very limited, and we could see in case if the markets resume its momentum on the upside, then they could show some good outperformance.
Yeah, I tell you what is showing good outperformance. Divi's Lab. 8% intraday on the bullish Citi call. Rucha Johnson with more details of why Citi is constructive on Divi's. And Rucha, I mean, some telling numbers out there in the assumptions for Divi's.
You're right, Niraj. So Citi has initiated on the stock with a buy recommendation and a target price of around 6,400 rupees. Now, this implies an upside of around 20%. Now, innovators have looked to de-risk their supply chain and Divi's Labs will likely be the key beneficiary of this supply chain diversification trend, and Citi expects that this could add around $800 million to the company's revenues. But moving on, we'll also see that the company has secured Lilly's GLP-1, the execution of which can drive a multi-year growth according to the brokerage house. The US Biosecure Act as well will likely drive diversification for the company, and Citi therefore believes that the company can become a prominent player in the chemistry-based CDMO projects, which are currently, largely dependent on China. Now, talking about valuations, well, the company is currently trading at around 20% higher to its own historical premium and also over NSE Pharma. But valuation are expected to likely remain elevated, and the brokerage house has assigned around 40 times EV by EBITDA multiple. So this is what we have on the company.
Okay. Thanks for that. Rucha and Tamanna, stellar. It's just that not just Divi's. I mean, Harsh was pointing it out that the stock has been a doubler in the last 12 months. It's an index stock which has doubled. And today's move on Divi's actually has carried some of the other API and CDMO players along with it. Lotus is up 3-4%. Some of the others must also be jumping. Stellar move. Look at that. 12 months, about 62%. Not a doubler really, but today's move, stunning move.
I'm just wondering, some of the factors that were listed there included the Biosecure Act. I suppose the GLP-1 deal with Eli Lilly is the big one, but Deven Choksi is joining us now, and I'm wondering if he's as optimistic about Divi's and other pharma names. He's, of course, the managing director at DR Choksi Investment Managers. Deven, bhai, great to have you on the show. Let's start with your take on Divi's, since it's the stock of the day.
Yeah, Tamanna, good afternoon. Well, I think somewhere in the last financial year, when we commissioned the coverage on this particular stock, when it was in the vicinity of around 3,400, 3,500, I think the underlying assumption were two, and I think that is what is getting validated now. The first assumption was that the higher capacity that the company has built, which they were up till now having the challenge in form of, I think, meeting the supply, because the buyer on the other side was, I think, reluctant, and that's where probably I think the company was struggling. I think that has played out well now. They have the higher amount of offtake, which has already started taking place on the CDMO side. And that's where probably I think the entire differentiation which has started happening. In fact, in last 2 quarters, you would notice that I think this is systematically happening, that the buyer is basically placing the larger amount of orders than I think the committed offtake of the supply that the company is producing on the CDMO side. That is where the plant utilization is. The API business, along with, I think, is also significantly ramping up because good part is that the capacity built up had already taken place in last 2 years, 3 years, and now the advantage is coming their way. Whatever the development that we are talking about, of course, it is going to play out over 2030. It's not going to happen that in 1 year, $800 million worth of opportunity will get encashed. But the fact remains that the capacity is already built by the company. And the fact remains that I think the customer is lifting the material now, which was not the case previously. And that is what the re-rating is all about. Maybe the working will follow in subsequent quarters. And that to that extent, I think you might find the stock slightly premium traded. But I would believe that I think in subsequent quarters, I think on a sustainable basis, higher growth should be expected in business from this company.
What a stellar move. I wonder if there is a trade still left here. And Shivangi, coming on Divi's, FNO stock, fairly liquid, nifty name, 8% today. Is there more steam left here?
Absolutely. We've seen a stellar move here. And of course, it's been a consolidation breakout of the last 20 odd sessions. And, this clearly indicates that there is a little more steam left here. Now, this stock has been perfectly respecting its 50 daily exponential moving averages, from April 2024. So stock is quite well placed. And even after the market volatility, we've seen that this has been one stock that has remained resilient. So I believe 60 to 50 is the next targets that we're looking at for this stock, with a support of 5,900.
Wow. Okay. Stop of that. And by the way, just wanted to clarify. I mean, we mentioned this, that the Divi's has been a doubler. So yes, over 12 months, just pull up the 12-month chart. It may be 62%, but the but the low in the last 12 months has been around 3,200. So from there to 6,022, that's a near doubler really. It's not 60%, slightly more. So in that sense, not from point to point, but from the lows that it probably clocked in April or maybe earlier, it's given about nearly 90% gains. So really strong show there. Devin, good afternoon. What about some of the other players in this pharma pack? Because today Cipla is up, Laurus is up. So some of the CDMO players, API players, all of them have done well. So if one is constructive on Divi's but finds it too expensive, are there other options there, or is Divi's the best bet, if you will?
Well, I think no comparisons to make here, but I think the most important part, in case of Laurus too, I think the similar situation has played out. I think they have the similar situation like what Divi's had, where the buyer was not lifting the material, despite of they building the capacity. Now the situation is reversed. I think the buyer is lifting the material for whatever reasons, maybe China factor, etc. But the buyer is lifting the material, and that is where I think you are seeing the better visibility of revenue. Now, whether it is directly comparable with Divi's, not too sure, I think, but I feel that the things have started changing even for Laurus as well. In fact, I think within the space, the frontline pharma companies, be it Sun, be it Cipla, be it DRL, I think these companies have actually, I think, started showing improvements on two counts. On one part, I think the complex generics, which they have been basically having the advantage of in US market particularly, is fetching them relatively better margins. And that is a fundamentally strong thing which has happened. Second thing, the input cost in most of the cases, I think because of the favorable input cost regime right now, I think they are not having challenge on that front. So the margin is relatively better. So on one side, supply side situation is improved. In case of, I think, the frontline pharma companies, it is improved also because of the better product mix, I think, which they have in form of complex generics. And on the other side, the margin. So it's a win-win situation right now as far as they are concerned. And that's what is getting reflected into the stock price. Though market has probably run up a little ahead of time, but that's a normal course, I think, which we cannot rule it out. In the improvement when there it is happening, market would definitely start giving some premium to this kind of businesses.
Okay, Easy Trip Planners back in news. They're going to be considering a bonus issue of shares on October 14th. Remember, this is a fairly newsy stock for a whole host of diversification plans as well. And a small spike there, about 2.5% up. 14th of October is the bonus share issue. But let's talk about the brokerage call of the day. Nomura's report on AMCs is on our radar, and Harsh is joining us now for more.
Well, Tamanna, good afternoon. Yes, financialization of savings, how do you play that? And Nomura seems to believe that AMCs is the way to go by, especially in the medium to long term. They believe that 18% AUM compounding realistic all the way to FY30, and therefore AMCs is a great play for that. They're expecting strong growth in low yield segments, ETF index funds, relatively slower growth there, but outside of lower yielding, slightly higher yielding segments likely to clock better growth than expected, because they believe that both in index as well as ETFs, more of institutional money, EPFO money will likely flow. And they believe retail money will go more into the higher yielding segments, which is a key positive. Now, core profitability also likely to grow but moderate gradually off those higher bases, and growth likely to drive valuation. So very growth oriented kind of sector or segment. In terms of names, they like HDFC AMC. From yesterday's close, 20% upside is what they see, 5,000 being the target price. They believe solid franchise along with good market share gains for HDFC AMC in particular will lead to 19% compounding on its EBITDA. Of course, stock is up nearly 5% on the back of that. So some of those gains locked in, maybe a 15% upside from here. Nippon AMC, they initiate coverage there, 785 being the target price, 20+% upside even from today's current market price. And they believe that rising fund performance tailwind as well as rising market share will aid the numbers for Nippon. UTI AMC, more neutral stance, 8% upside is what they see on that one. And they believe that there's been a consistent decline in market share there, which is a bit of a concern. So that's how they plan to play this entire financialization of savings theme.
It's quite a reversal in mood because once the SEBI F&O regulations came in, the sheen sort of wore off on the larger capital market play. Of course, AMCs is a different story altogether. Devin Choksi, just wanted your take on the AMC business and whether you see more of an upside there. Some of these companies have already run up a fair bit.
Well, yes, I think the bull market in particular, I think will definitely mean that businesses would probably start discounting the future well ahead of time. But as I see it, I think this is probably the beginning of a mega trend as far as I think the financialization of assets is concerned. Today, whatever the SIP numbers that you are seeing, and I think compared to what it was a few years back, I think there is a fair amount of excitement on that. But this may be the beginning because India's per capita income, which is currently $2,800, $2,900, I think is now in next 15 years or so, I think it is going to be $8,000 to $9,000. A fair bit of that particular money is going to go into the insurances or the pension funds or the equity AMC or equity AUM, etc. I think there is going to be a fair bit of growth coming in from their side. At the same time, the number of households who have started participating into the market through the mutual fund SIPs and all, they have started increasing leaps and bounds. So from that point of view also, I think one would remain confident. Now, more for the AMC business in particular, once they have established base, and I think the cost part in the initial year has been taken care of, I think in subsequent part, probably I think with the growth, with the distribution that they have, they can produce the growth. And that is where probably I think they would have relatively higher advantage compared to the newer AMCs who are now getting into the business. So existing ones, I think with the top 3 or 4, definitely I think they remain favorite as far as the list is concerned.
Ruchit, which one of these do you like among the AMCs on the charts?
Definitely HDFC AMC because the kind of relative outperformance this stock has been showing. Any dips, if we see the declines have not been supported by high volumes, whereas whenever the stock comes around its 100 EMA support, a good buying interest is seen now over there. So I think here the price-wise corrective phase or downside seems to be very limited. So if you have to choose anyone within the listed companies, I think HDFC AMC should stand out.
Okay, well, AMCs certainly flying in the session today. Now, just before we take that break, trying to see what else has really made a sharp up move in the session today. SpiceJet features in the list of things. Inox Wind and Suzlon feature in the list of things. Though Suzlon has cooled off considerably from the highs of the day. It's still up 4%. But if you look at the intraday of Suzlon from 79 all the way now down to about 76 or 76, 77. Not cooled off, not cracked, but certainly cooled off from the highs of the day. But, well, you could argue autos, aviation, all of them are in focus. And autos certainly because Hyundai is set to bring in one of India's biggest IPOs to the market. It's a 27,870 crore IPO with a price band of 1865 to 1960 per share. We spoke to the management on how the financials would fan out going ahead, what the company's CEO and whole-time director has to say. Tarun Garg spoke and said that they are eyeing an EBITDA margin of over 13% on a turnover of nearly 70,000 crores soon. Listen in.
We have always believed in quality of growth and really looking at not only the volumes but also capacity utilization, also EBITDA margins. If you see even financial year 24 on a turnover of close to 70,000 crores, we have an EBITDA margin of 13% plus, which is very good. And it has been helped by premiumization, our strong SUV mix, which is now almost 68%, our huge cost optimization efforts. Going forward, of course, new plant capacity is coming up in Pune, which will add a further 170,000 in phase 1 and 80,000 in phase 2. So I think our direction is very clear that we want to really grow sustainably and grow profitably.
Okay, so that's about Hyundai. Now, first a question to Devin Choksi, then a question to Shivangi Sharda before we thank her. But is this an IPO to subscribe, Devin Choksi, or do you think there are better plays or worse plays around? Well, how do you rate Hyundai?
Yeah, Niraj, I believe that I think there will be enough amount of room for subscribing this particular IPO. Not that they would have a very distinct advantage over Maruti at this point of time, because on a comparable basis on the financial metrics, both these companies would actually, I think, play out even on the strategy. Maruti has been, I think, progressing well with the premiumization. Hyundai has been into the premiumization. So from a perspective of looking at the margin, from a perspective of looking at, I think, the return on capital employed, all those numbers would fall in place by and large same. But why I feel that I think this particular stock deserves to be included in the portfolio? I think within the auto space, you already have exposure already taken for Maruti. You have taken exposure for even Tata Motor within the listed space, or even for that matter, Escorts and Mahindra and among the others, Eicher. On the other side, I think you have got this company which is now entering into the market. Significantly good amount of abilities, I think, that this company has demonstrated in the last, 2 decades of their operation in India. I believe that I think this company will deserve to be included into the portfolio. Exposure will have to be created so that I think the entire auto space as a whole, within that, I think this company would probably stand inside this particular portfolio. So yes, I think we believe that I think given the kind of strategy that they're adopting, including launching of new models and catering to different segments of the market through the mix of fuel, I believe that I think this company has to be included into the portfolio. They deserve to be included in the portfolio.
Okay, and definitely think about it. You're having a passenger vehicle IPO after 2 decades, after Maruti. So that's exciting as well. All right, we'll take a very short break, but on the other side, we get you the top buy today, sell tomorrow picks, and of course the latest. Shivangi, meanwhile, thank you so much for joining us, but we come back with Ruchit and Devin on what should be your strategy for tomorrow. Welcome back. All right, let's talk about SKF India. By the way, before we get to SKF India and the surge that we've seen in the stock, just to tell you that markets have taken a bit of a turn in the last half an hour or so, off their day's highs, of course, and the Nifty now in the negative, not massively. I wouldn't say there's a plunge, but definitely a bit of a bearish sentiment creeping in. Even the Nifty IT, which was roaring through the day, has come off its highs. Let's look at the bank Nifty. Also feeling a bit of pressure coming in there. The bank Nifty also now in negative territory. So a bit of mid-afternoon turbulence, if you will. In fact, the bank Nifty is 700 points off the day's high point. That's 900 points for the Sensex. But talking about SKF India, the stock has surged after the board approved a demerger of their auto and industrial units. Why have they done this? And why is this being seen as positive for the stock? Puneet is joining in to tell us why.
Well, definitely, it's a big positive move coming in from SKF India, and that's largely built on, the announcement that SKF had done globally in the month of September. So essentially, the parent is carving out the automotive business separately, and it's also going to be listed as well. So SKF AB, which is the parent company, has mentioned that they want to create value in both the companies going forward, and a separate management is the way to go. They mentioned that, the spin-off is expected to be completed by FY25 specifically, and the SKF AB also plans to list the automotive business by the first half of FY26, specifically in Nasdaq of Stockholm. Now, going forward, if you look at the global business, it's a giant mega house of a company. They have total revenues of about 84,000 crores for calendar year 24. And when you look at, the automotive division did revenues of about 24,000 odd crores, while the industrial division did revenues of about 60,000 crores. Now, when you look at the margins, the automotive business has lower margins, roughly 5.6%, versus industrial margins are at around 15.4 to 15.5%. So definitely, the less profitable business is going to get removed from the current listed company and listed separately. So separate focus, separate plans going forward. When you look at what's the impact on the Indian entity as well, that's important because Nuvama had put out a note recently. They mentioned that this will benefit SKF India. From the split of the parent company, they mentioned that they see potential benefit of enhanced profitability, specifically of the auto industry and that automotive business, and also specifically of the industrial business as well. For calendar year of 2023, auto segment for India specifically formed around 40% of the total revenues, with the industrial taking about 51% and spares and repairs taking the rest. Finally, margins, it's similar to the global, 15% for industrial, 5.6% for the auto business. And the Nuvama's final say on this is that, the benefits in the long term far outset the cost which will come from the splitting out. So overall, a big positive thumbs up for SKF India today in trade on the back of the, demerger news from SKF Global. Back to you.
Okay. So SKF also off the day's highs, to be honest, but still about 4% up. Looking interesting. The cabinet briefing, meanwhile, on your radar, and so far the statement coming in from Ashwini Vaishnav, Union Minister, is that they've approved supply of fortified rice under all schemes with an outlay of 17,082 crores. But Devin, I want to come to you now on IT. The results season kicks off from tomorrow, and first let me start with your sort of overview on what the second quarter looks like. There've been a mixed bag of expectations so far.
Well, I think probably, as we have been discussing up till now, the worst is behind them. That is for sure. With the rate reduction happening, and I think the spending increasing in the US market particularly, Indian IT companies would have higher amount of order to tap. That is another point. But more importantly, I think what I am observing, most of the companies are basically now catering to the higher segment of the market, which is, I think, now getting into the cloud computing, and at the same time, the AI-based developments, I think, on the use case basis, as well as the tools, I think, which they are developing for customers. In my viewpoint, I think the likes of Infosys, likes of TCS, HCL Tech, they are already demonstrating higher amount of intake of new orders, which are sizably large. Over a period of 5 to 7 years, they could be executed. So giving a fairly good amount of spread, as well as, I think, the visibility as we want to look at. They are actually, I think, getting into that space, I think, more than it was before. The interesting component within this is the mid-tier IT companies, which are particularly in engineering R&D space, likes of LTTS, LTIM, KPIT, even Tata Technology, Tata Elxsi, which are operating in a specialized on the niche areas. Probably, I think they are deserving to get a little more attention from here on because of the higher amount of order inflow getting into their books and probably getting the better visibility with the margin. So I think the space looks reasonably okay, not too expensive either. Maybe I think in the correct price, some of the mid-tier IT companies may look relatively better.
Okay. Well, IT's, Richard, it's been a good move today for IT on a dull day for the markets by and large, still about 0.25% or other 0.5%. And some of the opinion around, say, for example, a TCS that I was reading about today, that, I mean, with the valuations that they are trading at, the expectations of lower growth seem to have been baked in. What do the charts tell you?
So, Niraj, if you look at recent price action, so I think post that US interest rate Fed interest rate cut in the mid of September, we've not seen any significant trended up move in the IT names. In fact, the Nifty IT index has seen a consolidation since that time. The good thing is that the 40 EMA support for the Nifty IT index, which is around 41,500, is still intact. So I think on the index front, overall trend remains positive till 41,500 is intact. But if that gets breached, then I think we could see some sort of price-wise correction or profit booking, because Nifty IT index also in last 3.5, 4 months have rallied about 36 to 38% from its lows. So for now, I think if any existing long positions are there, then they should continue to hold on in the IT names with for a stop loss below 41,500 on the Nifty IT index. And as far as TCS is concerned, I think similar consolidation in last 10-15 days has been seen in TCS, where 4150, 4200 is the support range, and it's right now trading quite close to that support level. So that's why at the start of the show, when we spoke about the IT names, my take was that we will wait for the results outcome and how the prices react to that numbers. Because in last 2 weeks, we have not seen any kind of buying activity happening in the IT names. So either there would be some time-wise correction or consolidation in the near term that needs to be seen post the numbers.
Fair enough. Now, shifting focus to Torrent Power, the stock hit life highs after securing 2 letters of awards, LOAs, from Maharashtra's State Electricity Distribution Board. Mikas telling us why these, what is really working for Torrent Power?
So yes, Torrent Power has been buzzing in trade, an intraday high of over 9%, volumes over 3 times its 30-day average. Now this is on the back of the company receiving 2 letters of awards from the Maharashtra State Electricity Distribution Company to supply for a long-term 2,000 megawatts of energy storage capacity. The power will be supplied from the interstate connected pumped hydro storage plant, and this capacity is actually inclusive of the 1,500 megawatt LOI received by the company back in September, which means that the company has now gotten 500 megawatts of additional capacity in its supply agreement, and the Maharashtra State Electricity Distribution Company will be procuring this energy storage capacity for a period of 40 years, and the company will discharge power for 8 hours per day. A little bit about Torrent Power's goals in energy storage. Well, the company plans to install 5 to 8 gigawatts of pumped hydro storage capacity and will invest 25,000 to 35,000 crores in the area. We also had a Morgan Stanley note which has maintained an overweight rating on the stock with a 2,268 rupee target, which implies a 25% upside. Now, it's based on the back of the order win. The company does expect to have an annual revenue of 1,680 crores is what the brokerage has highlighted. And Morgan Stanley has also stated that the project will generate an equity internal rate of return of 15%.
So Torrent Power in focus, and actually has stayed pretty steady through the day. Even as some stocks have come off, Torrent Power has been fine. Ruchit, on the charts, is Torrent Power looking like it's worth getting into even at these levels?
I think any existing positions should be held on. There is a high top, high bottom structure which indicates an uptrend. But the recent run up, the weekly momentum readings are a bit overbought. So such overbought setups should get cool off either with some price wise dip towards the support of 1700 or through some time wise correction. So it's a buy and dip stock where in case if we see any kind of dip towards that 1700, 1750 in the near term, then that should be used as a buying opportunity. But for now, since the broader trend remains up, fresh buying is recommended only on dips, but existing positions can be held on.
Torrent Power, Devin, just not only Torrent Power, let's look at the whole space, Tata Power as well, a whole host of companies in this space have run up a fair bit. Do you think the LOA news is meriting the kind of spike we've seen today?
Well, market will get excited about, I think, such news, and definitely there should be. Though I think we all understand that I think these companies, they don't dramatically start producing the result from the next day. But the most important part here is the government is allocating significantly large amount of budget on infrastructure spending, be it in the area of generation, be it in the area of renewables, be it in the area of transmission. I guess I think in each and every space, I think in the power utility business, the government is a big time spending agency today. And that is where probably maximum amount of excitement is all about. Like if Tata Power kind of a company ends up getting such a huge amount of order for the renewables, obviously I think the suppliers like Suzlon and Siemens Gamesa kind of companies would definitely have much larger business to talk about, not for 1 year, but I think over a period of next 5 to 7 years. So I think we remain distinctly bullish about it. At the same time, I think in current environment, the earnings are quite reasonably well secured for these companies. Like you mentioned, I think around 15% kind of return is guaranteed, I think, through the pricing mechanism. So which is what I think is making this entire business sustainable. And more importantly, I think the larger players like insurance companies, sovereign funds, pension funds, who have the appetite to invest for 25 to 50 years, I think they are the ones who are basically allocating larger amount of money or writing checks for this kind of businesses for investment. So one should remain optimistic about the possibilities. Maybe in the near term, everything is expensive. Nothing is available with a deep value or discount kind of a thing. So one will have to wait for opportunities whenever market is.
Just to take that point forward of government expenditure fueling more orders, of course, and excitement in terms of news for these companies. And I just want to link it to what the governor said today in the policy as well, saying that he's expecting government expenditure to now pick up. Are we going to see a return to old favorites, Devin, in your defense space, Azentec, Paras, BEL? Are we going to see more of your infra plays now coming in?
Infra is a story which is likely to be on for this entire decade. So I think there is no doubt about it. Maybe I think what we are discussing today is that the business is given for these companies. We are discussing today the valuation. If the valuation picks out ahead of time, then the market will not be very kind. Market will probably try and start giving the offloading of, start making profits. So that's what I think we have been experiencing in some of the defense names, or even for that matter, railway names, etc. In my viewpoint, I think unless market gives meaningful price correction, stroke or time correction, I guess I think the investor will not be in a hurry to buy into some of the expensive names. Also, the fact remains that suppose if the last month is one testimony, 41 companies have filed for DRHP in September. If these are the new papers which are likely to come in next 3-6 months' time, then obviously I think the market is going to be remaining very busy with the new IPOs coming into the market. So the premium in the secondary market probably may not be same as we have seen in previous years. That is a factor that one needs to watch out for while constructing the portfolio.
Mm-hmm. Okay. That's the idea is therefore now to focus on some of the things that have moved, maybe post policy, or in certain cases even pre-policy because of quarterly updates. Now, real estate was having a field day today, and Phoenix Mills in particular had jumped on a healthy set of September numbers that they put out. Anushi Johnson with more details about this. Now, Anushi, one is what Phoenix Mills declared. Two, what is it that they have said about the future, which was very noteworthy?
Right, Niraj, so if you look at Phoenix Mills update, healthy set of numbers that we are looking at for. Now the stock did see an intraday high of about 6%. You've mentioned on the strong gains that the counter has seen in today, but let's just look at the numbers. So retailer sales were up about 25% at 3,289 crore in the second quarter. While if you look at the whole H1, also a similar kind of a growth trajectory that you're seeing. So strong footfalls that we're seeing in the retail business. So strong footfalls in the shopping malls across, and this trend is expected to sustain with this healthier season, which is the festive trends coming in. So more of these footfalls are expected. So watch out would remain on the Q3 and Q4 numbers. Also, if you look at the collections number, also collections has seen about a 27% of a growth at 812 crore and 29% of a growth in overall of H1 FY25. Again, the question also was on the occupancies a few quarters ago, so which now stood at about 92%. This is the average trading occupancy across its majority of its malls that we are speaking about. And even if you look at it at its average leasing occupancy, that was also about the 95% level that we are seeing across. So that was on the retail side of the business, but even the commercial and the hospitality business have recorded this strong kind of a performance that we are looking at for Phoenix Mills, which is again, which the market is seeing, and the strong gains that we are seeing on the counter.
Okay, Phoenix Mills is a recovery story really. All of real estate today is a recovery story after quite a few down days, and today we've heard from 3 developers on the channel, all of them expectedly very positive about Q2 and saying that festive sales are going to be great. But then, you hardly meet a management who says things are going to go badly, to be fair. I just want to get Deven's view in on the reality story. And whether you think we're going to continue to see that kind of an up move, maybe some positive reactions today because of monetary policy, interest rate cuts on the anvil. But do the numbers match up to the kind of run-up we've seen?
Well, I think they are very, very smart on the valuation side. I think expensive at the same time, most of the stocks. But underlying change in the business model, which is significant. On one side, they are having the same concept applied called premiumization in the offerings that they are having, the new construction, the new space that they are offering. So certainly they are charging the premium on the top of it. On the other side, I think the input costs are remaining pretty much under control. And that's where probably I think these companies are talking about sustaining their margins, which was probably not the same case, I think, in earlier periods. So I think both these equations are working well. Demand scenario remaining robust. I think the margins are protected. The consumer is spending money, and with the higher amount of increase in the per capita income, as I was making a point earlier also, every space, I think, be it the housing space or be it commercial space or even for that matter rentals, which we are talking about, there also, I think, the higher amount of collection in the books of some of these companies. So one can remain optimistic about it. But again, I think as an investor, I would like to buy something which is giving me the margin of safety. Currently, everything is well priced into the stock prices, and that is where probably one is waiting for some correction to happen to buy into some of the good quality counters in real estate.
Okay, well, so that's the view on some of the realty names. And yeah, I think Devin Chokshi is right. Selectively, some people might be waiting. In some cases, stocks have run up so much that it's probably prudent to wait as well. Some stocks which are off their lows, though, just wanted to mark some spikes in names like Birlasoft or Rajratan Global or Gulshan Polyols, and just look at the intradays of those. And there's some sharp up moves there into a few of those. Maybe not as much in Birlasoft, but I think Rajratan and Gulshan Polyols very likely have some spikes in the last 15-20 minutes of trade. So decent up moves there. But good time to get in closing strategies. And Ruchit, just wondering, what's a good trade? What's a BTST or STBT as the case may be?
I recommend BTST in Exide Industries today. So after a long time, I think the stock has again shown some good positive move in today's trading session. And in fact, if you look at last 2 months, for the entire month of August as well as September, the stock had consolidated with a range of 510 to 470. And the stock today is giving a close above that 510 resistance. The volumes are also good compared to daily average. So there should be a good follow-up move tomorrow as well. So it can go long from a BTST perspective, a small stop below 510. And expecting targets around 535 to 540.
Exide 517 and counting. There's a lot of chatter, Devin Chokshi, around whether battery companies will do some tie-ups with companies and therefore that can spur them. Any thoughts here on Exide?
Not too sure, Niraj, I think on individual companies per se. But yes, I think the entire ecosystem is now will have to be looked at, I think, from the point of view of the storage. And particularly, I think for electric vehicles in particular, keeping in mind, I think we'll have to look at the entire storage space as a whole. The interesting thing which came out from JSWMG is, I think, really interesting. They basically introduced the model called battery as a service. Now, if this is going to be a reality eventually for all the OEMs, then in such situation, 2 main players will get benefited maximum out of it. One, of course, I think the equipment producers like battery producers or battery management system providers. But the other most important player here would be the finance companies. I think the finance companies funding this particular battery mechanism, which is going to create, I think, a new revenue stream, a new product stream for them into some of the companies. So we like, I think, the proposition which is built into the likes of Bajaj Finance, particularly, who is quite advanced in probably tapping such kind of opportunities, wherein I think they would start funding the batteries, I think, which they are already doing it. In my viewpoint, I think this is one area which one will have to look at it more systematically. Though you may not get direct opportunity in battery manufacturers, but I think the system providers, the management service providers, and I think the finance companies, as I said, could be, I think, a better choice as well, I think, from investment perspective.
Okay. Focus now shifting clearly to the earnings season. The Q2 season kicks off officially from tomorrow, of course, with TCS. But what is the street expecting this time round? Agam joins in with details. Agam, is Q2 looking like a bit of a soft quarter?
It certainly is going to be a very moderate quarter, especially given the kind of growth that we've seen over the past few quarters, as well as a relatively higher base that's now coming into play. In terms of your overall coverage, when you have a lot of broking houses which are actually factoring in about 0 to 2% growth in the top line and about the same when it comes to the bottom line as well. Of course, we have to take a look at some of your relatively larger names which are actually diluting the growth coming in. In terms of factors that are playing in favor of the earnings this time around, early signs of recovery in rural consumption, strong monsoons which augur well for rural income. Of course, urban demand is also likely to remain steady. And among factors which are working against the earnings, there are some tailwinds when it comes to operating margins, given we have seen that sticky inflation which has turned out a relatively higher raw material costs as well. And then, of course, we have a pricing environment which has remain mixed for most companies going in. Among key sectors that we're keeping an eye on, auto sector, two-wheelers and tractors have done well. BFSI, again, moderate growth coming in. Provisional numbers do suggest a little bit of slowdown, even though we have seen growth. And when it comes to industrial goods, the capital goods specifically is likely to see higher growth in terms of order books, as well as low base. But on the other hand, we have seen heady valuations for something like electronic manufacturing services as well, even though growth out there has been robust. Consumption is a mixed factor. We have seen mixed trends when it comes to the FMCG sector. But in general, we are also seeing gradual recovery in the rural segment, which is likely to aid consumption. Consumer durables specifically will have a very strong quarter going in. IT, again, we're expecting a strong quarter, but this is also on the expectations that in general the environment has not been very encouraging. But this time around, this particular quarter could be better, and we could also see a slightly marginal uptick in terms of your guidance here, and even though guidance has been in general very weak. And finally, Pharma, we're looking at a healthy quarter led by US generics, so keeping an eye on a whole lot of these sectors going in.
All right, thank you for that, Agam. And that's a great comprehensive sort of a look at what is going to be working. And, I'm wondering, Devin, if you had to take a position and a strategic call before Q2, what would be your top 4 or 5 companies that you would look at ahead of this earnings season?
I go simple, Tamanna. I think the retail consumption is on the rise. And that is where my comfort level stays with good quality NBFC franchises, including housing finance business. Of course, Bajaj Housing Finance, which is separately listed, I think is slightly expensively traded. But I think given the kind of growth of 30% in the lending book, both retail finance as well as housing finance, I think this is one space which looks quite interesting to me. Second one, which looks again interesting, is the insurance, the life insurance companies in particular. The new business premium growth is remaining, on a higher side. That gives me the comfort level that, okay, this particular business is now probably taking off in a systematic manner. Technology companies in particular, because of the higher visibility of the order book that they are now creating, they look relatively interesting as well from the investment point of view. And suppose if the OEMs, that auto OEMs, if they indicate that during this discount season that they have started with, if they end up clearing their inventory and probably they are attracting a new footfalls, maybe the fourth quarter of the financial year could be relatively better for them. So at a beaten down valuation, some of them may be looking relatively more interesting to add into the portfolio. So likewise, very selectively one can buy into good quality stocks in the portfolio. Commodity, of course, I think the metal commodity per se, we remain distinctly bullish about it. So there also selective companies can be probably looked into from the investment point of view as well.
Yeah, interesting over there. Ruchit, just, as we close up, your one top call for tomorrow?
So one was Excite, which I've already given. And I think apart from that, some of the pharma names could continue the momentum tomorrow as well. And Lupin within the space is still looking positive, where again we have seen a resumption of the uptrend today. So Lupin can be bought at current levels with stop loss below 2230 for potential near-term targets around 2400.
Okay, gentlemen, both of you, Deven, Choksi, Ruchit, thank you so much, both of you, for joining in today and giving us your thoughts. Really appreciate your time. About a minute and a half left for the markets to shut shop. And it's been a quiet day, but it belies the intraday action because we've lost significant ground from the highs of the day. The Nifty intraday, the Bank Nifty intraday really tells you the story because we did well and then completely came off. So that's the nature of the beast. I mean, it did so well. And then look at the second half. It's been a petered out day. I must say, Europe is quiet too. Asia, China had some very deep losses today. So fair degree of volatility in global markets as well in the session today. The large caps will come up on your screen, and I think the set of stocks remains the same. FMCG sulked big time today. Oil upstream has sulked big time today. That forms the top 6 losers in trade, along with HDFC Bank also losing out. On the flip side, Trent, Tata Motors, some bit of IT, some bit of banking. So financials have kind of held out fairly strongly. At the broader end of the spectrum, we pretty much have similar kind of moves as well, because the Nifty Mid-Cap Index up about 1%, small caps too doing their bit, and the BSE 500 gainers and losers will come up on your screen. And you just see that kind of list there. I mean, the stock of the day to my mind was Divi's. AkzoNobel has come off quite rapidly from the highs of the day, but Rights, Gujarat Fluoro, Symphony, etc., all of them doing well. What didn't do well? Some bit of NBFCs and small banks, so maybe AU Small Finance Bank, a couple of other NBFCs didn't do well. Adani Energy being a bit soft in trade. Bombay Burma, the holding company, also looking wobbly. So, holding company of Britannia. So that's the nature of stocks which actually corrected a bit. But I think, to my mind, one of the standout stories was, of course, what happened to banks and NBFCs and the kind of moves that they have made today. And selectively Pharma, particularly Divi's, but Cipla, Loras, etc., not too far behind. So that's the long and short of what happened in trade today. The question only is that does this volatility stay while specific stocks continue to make the move? I think market participants would probably grab that with both hands. Okay, well, that's the long and short of the market close. To all of you who tuned in, thanks so much for being with us on Any Market Close. And see you with live markets tomorrow at 8 a.m.